we'll talk about some different tips for when you're signing up for the credit cards or you're talking to your credit card company. So your credit rating, as Jason mentioned, will dip each time that you sign up for a new card. So it's a very small percentage of your overall credit score. And what you can do to maximize that is apply for 2 or 3 credit cards at the same time. So you just apply on the same day. All of those will count as one because all of the different credit card companies are hitting your score at the same time. So it doesn't count 3 individual times, it's just one time. So that's one tip. You can also do that if you're calling your credit card companies and asking them for a limit increase, because they'll do a soft pull on your credit report or your credit score at that time, your credit report. And then you want to make sure that you're very organized about your numbers. Don't ask for a limit on your increase just because you can. So have a purpose for doing it, because having a limit too high or having too much credit available also can look bad on your score if you're not using it. So when we asked for a limit, I think we were doing another coaching program and we wanted to put it in on our credit card to get the points. And so I had to call and ask for an increase, and I said, I need X dollars. This is how much I need for this coaching program. And they said, sounds great, and they increased that limit. So have a purpose for doing it. 0% does not mean no fees. So that part is very important. So when we're doing the balance transfers here, a lot of the companies are now charging 5% for the fee for getting that money. So I brought a bad example. A lot of times these come with little paper checks at the bottom. Have you seen the paper checks in the mail? So you can actually write that check to yourself. And that's one of the fastest ways to do the balance transfer. But there is fine print that you need to go over. So this one has 0% till July 2026. So that comes at a 5% or 4% fee. So you have to build into your calculations and your budgeting that 4% fee, because it will be taken from the maximum amount. So the one says I have $44,000 available. That's $44,000 minus the 4% that they are charging for the fee. So just keep that in mind when you're looking at these. When you're paying your monthly bill, it is about 1 to 2% of the entire amount that you've borrowed. So that's kind of a rough calculation for you. I haven't seen any that were charging us more than 2% per month, the outstanding balance. When you have that credit card and you've done a balance transfer, put it away. Do not use it again, because a lot of these have verbiage on it that if you put another charge on there later, then the full balance will be due at the 21% rate. If you do this, put that card away. Don't use it until it's paid off. Part of the meticulous records, then we're using the credit card juggling to our ability to acquire assets that are income producing. That's the arbitrage part. So this is my binder. I have a binder at home that's pretty thick. It has all these different tabs on it, and this is how I keep track of fine print, put any balance transfer offers that we get into this binder so that I can flip through them and see which one's going to work out the best for us for whatever our certain situation is. Make a loan sheet. So this is marriage advice. This is classic, great. You owe me for this marriage advice. If you take out a balance transfer loan, you should write yourself a promissory note. And it should say, I'm taking X dollars from X credit card for this purpose. And then you sign it, and that keeps you accountable. And then you put it in your binder, because then when your husband comes around to tax time and is like, what's this $30,000 on the Discover card for? You're like, I don't know. Because it's been 10 months. Now you have a piece of paper that has it documented so you know exactly what it was for. Because if you roll it over a couple of times and you forget what it's for, then it will help save you in the end. Then this is where I keep my credit cards. So I have those baseball, I put my credit card in there. This is my credit card. This is where they all go, because they're not going around in my wallet with me all the time. I also have this great sticker, don't use that one. So if I'm flipping through the book because we need something, I'm not going to use that credit card because I don't want to trigger the 22, 27%, 32%, whatever interest rate on the balance for next month's payment. This is a screenshot of the spreadsheet that I use. And so I have an Excel spreadsheet where I have a list of all of our different cards. When we open them, there's a balance on it. So like I do a balance transfer, and I'll put the amount in this column. Then I also keep track of like the annual fees are. You don't want it to get too out of hand with the annual fees. You can do a really great job increasing the credit that you have available just with the free cards. So mostly the cards that we pay for are the Amex charge card to have that as part of our credit score, the Southwest pass cards. So sometimes if I'm up to date, I'll put in like the promos are that they send in the mail. That's kind of how I keep track of it. And I also have another spreadsheet where I keep track of the due dates. So for me personally, I like to plan like months ahead. I have 2 months worth of dates for each of my credit cards. He can take care of himself. His money, it's all my money, right?
She says, mine, what's yours is ours.
Yeah. I'll down like our credit cards are when payday is. That's important, so I know that I have enough money to pay it off. So I just put in a balance here. And it's from personal or a business account, and then I'll write like what business account it is because I'm notorious for paying things from the wrong account. That kind of thing, it from the proper accounts is important for your bookkeeping to make it look like this is a legitimate business expense when you're trying to your taxes or that type of bookkeeping. Anything else you want to say about that?
The only thing is the marriage advice she gave. It's very important because we've had several conversations. What was this for? Where was it from? Because if you do 3 or 4 balance transfers in a year, you might start forgetting what you did that months ago. The last time I pulled money out of it was for this, but what did I do 6 months ago?
Yeah.
So I can't remember what I was doing last week when I'm really busy.
So that's a process that we're using moving forward. Okay, now I'll talk to you a bit about some business credit. That was all personal credit. Your personal credit is important for the balance transfers, offers, those types of things. The business credit is important for making your company look legitimate and be able to do business in the future. Your personal credit plays into your business credit. That's why we talk about both things.
The note on the way your personal credit is, when you're starting business credit, almost every time they're going to ask for a personal guarantee because your business has no credit of its own. When we started this, I had to sign a personal guarantee for every loan. Now I believe I owe about $600,000 with no personal guarantee because once we'd built my business credit up enough, they stopped asking me for a personal guarantee because my business now has its own credit profile that is long enough standing that it qualified without any of my personal credit on it.
I forgot a couple of things I was going to mention about the personal credit. So when you are applying for your credit card, ask you for your income. And I always do gross income. And I combine any income that's available to you. So his money is my money, right? We talked about that. So I can say that his millions of dollars, JK, from his real estate business are my income. And so that's what I use for income when I'm submitting these applications. So hopefully as a business owner, your income increases over time, right? Every 6 months or 12 months, I will go into my, for my credit cards and I will increase my income and that will increase the limit that they give you. That's one tip for that. I think, was there something else I was going to say? So yeah, do it every 6 to 12 months. A soft pull on your credit report, so it's not going to ding your credit very much. What did you say your personal credit score was? We're bragging rights here.
Right now, because I haven't used much of my personal credit for a while, I'm up in the 836 to 838 or 839 range on which credit card it is, because they all
say something a little different.
It doesn't matter because I don't get any better offers of credit 800 something as I did at 770.
It doesn't matter because mine's higher. Mine. So when I checked mine the other day, it was 843 out of 850.
Good job.
But again, like you said, it doesn't matter too much. So that's just part of having credit for so long and being responsible with it. So I think you start getting the balance transfer offers around probably 700. When we first started, I think I was like 720 or something like that. So I both had really good credit. We started getting these balance transfer offers immediately, and they come all the time. You don't have to do the paper ones. You can usually do this through the app on your credit card, or if you go to the online portal, and usually it only takes a few days. So that's one of the benefits of using a credit card balance transfer, that you have the paper check, you take it to your bank, and they deposit it into your account. They might have a hold on it for a period of days until it settles. That money is available to you. The credit card company isn't asking you what you're using it for. They're not going to say, oh, we're not going to let you have that because you want to buy a boat. That's a really nice feature of using this to your advantage. I think that was about it. Right?
Before we go on to the business credit, does anybody here have questions on personal credit before we change gears?
How do you? So I have a lot of cards over the last years. I don't use a bunch of them because once I get the 0% thing, and once I get out of that period, I mothball that sucker and go to another one. So they sit for a while. And I've had a couple of them drop my credit amount.
It's because you don't use it?
Yes.
So Emily probably does hers a little different. The question was, how do you deal with having multiple credit cards, and once you're past the balance transfers, might drop your credit because you don't use it? So what I do is every month, on the first of the month, I go to my book and I pull out a different credit card and I swap it out with the one I was using. And so I just keep rotating. The business cards are pretty much always in my wallet, but my personal credit cards, I use them, and I make sure I use them at least once every 6 months. So I've got one card that is my recurring charges card. So like cell phone bill automatically hits that card and it gets paid every month, recurring charges. But just put something on everyone so that, or at least use it every 6 months, and you won't have the problem you're talking about.
I've had that happen too, and I think that some of the companies are their amount of credit available to people, especially like of America. They're kind of the rocks. Some of the companies are some of that credit back, and that does happen from time to time. But you can always go back to them and say, hey, I haven't been using my card. Is there any that you can increase my limit based on this information? They might give you some back.
Did you have a question?
The balance transfer, do you get them all in the mail, or if they don't send you in the mail, you can apply on the app?
Yes. So that's a great question. Thanks for pointing that out. In order to get these in the mail, you have to opt in for mail, send mail from those companies. So if you have that paperless in the account, then they won't send these to you. You can still get them the app or the websites. There should be a section that says like available to you. They should have that information there, and you can fill it out online. Andrew.
With that being said, should we like our cards, like gasoline or something like that? Just like, that's what I was doing for a while. I'd keep 3 cards in my wallet, and then I'd take those 3 cards out and use it just for fuel or food or small purchases just to keep the credit moving.
That's exactly what I'm doing. My personal credit cards, because I have a bunch of them, every month I swap the one I keep in my wallet out and move to the next one. Just making sure that the credit card has some activity at least every 6 months. And you can do it, you could have all of them out and do, like you've got a Netflix subscription and a cell phone and your property management software, all these different things. You could have each one hit a different credit card and then just pay every bill every month. Or what I personally do is I swap it out. I've got 6 credit cards, so I use a credit card for a month. I go to the next one, and I go to the next one. And when I get to the end, I go back to the top.
So does it matter how much you use on it to keep it moving, or it's like a
I haven't seen a problem with the amount I'm using it. I'm, on average, my personal credit cards, because I'm going through gas, I drive a truck and I drive a lot for being a property manager, full of, go through about $400 or $500 minimum every month. Some months I may have $3,000 on it, and I haven't had any of my credit cards reduce my balances or give me problems about it, as long as I keep using it. The one before I started doing this was in about month 8 that I had it sitting in the book and never put anything on it, that I got that notice in the mail that we're reducing your credit. And then I called them and said, card that I think it had $10,000 on it, they dropped it down to $3,000. I got that letter. I called them back and I said, I was going to use this credit card for this charge. I need the credit to be $20,000. And they said, well, we can't do that. And they raised it, I think, to $15,600. And that's when I was like, oh, yes, I need to make sure I use them, because I started seeing those reductions in about month 8 or 9. But
It's
as long
just
as
any activity that you put on it. So it could be one purchase. It could be, I always remember this from college, a stick of gum. Just put a stick of gum on your credit card and that'll build your credit. A stick of gum while you're at the gas station putting gas in your minivan.
Does it make sense to like put on $100 and just like the minimum payments on it, just so you can have some payment history? Or put 100, go on your credit card and just do minimum payments on it. That way you can have some more payment history and some more interest or something like that.
For credit cards, no. If you are talking about an installment loan, like go to the bank and you ask for a personal loan and they give you the loan, pay it off as agreed. From a credit card's perspective, you need to pay it on time. Thinks that credit cards want that 20 or 30 or whatever % credit that they're charging. They don't. They want you to go spend the money, pay it off, and then go spend the money again. Because they're making a fee every time you swipe your credit card. And that's where their real money is. So from a credit card's perspective, they don't need to pay them the extra credit, the extra interest. Swipe it, pay it off. The 30-day grace period on all of those charges you make. So when you get the bill, as long as you pay it on time, you won't get charged any interest. I got really mad last year. The United States Postal Service changed their service agreements and stopped doing 2-day mail and went to a week. One of my credit cards got paid late, and I ended up getting like $2.47 in interest charge. I was very, very angry.
Which wouldn't happen if you had it on a spreadsheet like I do.
That's not true. I note it's when they changed their service, so the bank sent out my automatic payment on the normal date.
Okay.
It just came in late because I needed to back up since it used to be 2 days and now it's 5 days is what the office guarantees for that type of mail. So now I have to pay my credit card or issue that payment 5 days early.
Jason's a little bit pickier than I am, so he doesn't want the credit card company pulling the amount from his bank account. He wants to be in charge of sending them a check for the amount. So that's I'm fine with a bank account or with a credit card company is getting money from my bank account so that I avoid that issue. Yes.
We'll go ahead and I'm sorry, one more.
Yeah, the bookkeeping stuff you have, do you use QuickBooks or any other thing besides a spreadsheet?
That's another Jasonism. He's anti-QuickBooks, so no, we don't use QuickBooks. We use mostly Excel spreadsheets.
It depends on how you're doing it. For my property management software, I use an app called Stessa, which is really good for doing for property management. I had QuickBooks for 3 years, and it was such a pain and cost so much more that I stopped using it. Because QuickBooks isn't really directly made the way they do their subscription model. Doesn't really work for a portfolio. So I won't complain about QuickBooks more in this type of a presentation. I can give you more offline.
What was the name of that software program?
Stessa,
That's
assets backward, or the backside of assets.
Okay, so to building your business credit. So you have your business officially formed with state and an EIN number to build your credit. So we registered our company, we have an EIN number. Then the thing that we need to have is a business checking account. So you have to go to your bank and open a business checking account. This is where your payments are going to come from if you have a line of credit and that other like that. You'll have to have a registered phone number. We Google phone, what's it? Google Talk, Google Voice, and so we have a Google phone number with of our businesses, and is sufficient. So several different companies that report business credit. Dun & Bradstreet is one of them, and then also Experian and Equifax, also people report business credit.
One very, very difference between personal credit and business credit. As soon as you're born and you get a social security number, your credit report with the starts. There's a profile on you. Business credit, they don't do that. You have to actively go out and initiate something and start the process of building that business credit because it is not automatic like personal credit.
And that's why it's important to have the EIN, because it's essentially the social security number of your business. All right, so this is talking about Dun & Bradstreet. This is where the bit of your business reporting is going to fall under. This is a gold standard for the industry for your business credit. This is a QR code that should go to their website. And this is used by creditors to determine how credit worthy your business is. And this is helpful when you're going to the bank for bank loans and that type of thing. The cool thing about this is that you are in charge of reporting things to Dun & Bradstreet, so you get to build your own credit report. So companies won't be contributing to this. You get to put in, I paid stuff on time. Great thing with my business credit. So we're in charge of your Dun & Bradstreet. No one else is going to do it for you. That also means that you have to put in the work to form it, which can be kind of confusing. And you get to have the benefit of putting your history. So,
but some that you can work with, like she had line on that slide, they will do the report to Dun & Bradstreet once you have a profile set up, and they're one of the easier ones to get. They'll give you a net 30 immediately.
There are also companies that will help you set this up in a correct way. So to be honest, we haven't done this in several years, so it might be a little bit different from when we did it, and I've slept a lot since then. So I'm kind of rusty on the details for it, but I can definitely help you if I have questions about it. But you have to have paperwork ready, so you have to have like an address, your phone number, your EIN when you're setting all of these things up. And also need to look at a list of different codes because you're going to categorize your business. And the way that you categorize your business is very important for when you're going to banks, for instance, and asking for loans. Because banks have certain different business codes that they will loan to more than others. And I'm sure Tony can help talk about that, or Brighton can talk about that too if you have questions. But for real estate, like I said, you want to be specific, but you don't want to pigeonhole yourself into a business code that might not be credit worthy. What some examples? I think like Club is one that you probably might not get good credit for, or good business lines of credit for that. What were some of the other ones that they talked about?
Anything you're a direct competitor to a bank. So if you open up a capital fund that does mortgages and you categorize your capital as same thing as the bank's mortgage lending, they're probably not going to give you mortgages for that or credit for that business. Brighton?
Yeah, I've that from opening multiple lending businesses, and I had to be very specific with the wording so that it didn't trigger their system, because the first time it got shut down.